The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We have a CPI number this morning, and the market likes it. No surprises. We have the S&Ps up by 28 points. That's about 0.5% right now. NASDAQ 100. We're up by about 161 points, about 0.75%. That's a 1-minute chart. Let's put it back to a 15-minute just so you can see the escalation. NASDAQ pushing the highs of yesterday morning at about 21,567 right now. The S&Ps right at that level as well, 6,074, almost to the tick of where we were yesterday at about 10:45 a.m. yesterday morning. Dow up 97 points, 44,432, and you got the Russell right now up by about 16 or 0.7%. Bitcoin, it's participating, up $2,495, right at about 100,000. We jump over to crude, up by 82 pennies to 69.41 right now. How about that gold contract? Now, this is going to be, check it out, gold, 27.34. We were at 27.41 earlier this morning. You jump to the 10-year. Following the CPI number, we have higher price and lower yield. Okay, the 10-year is up 4 ticks, but we're realistically up 10 ticks from where we were coming into that CPI number. You have the 10-year yield at 4.21%, so we have a little bit of higher price, lower yield coming at you. And when you got lower yield, that's putting some weakness back into the dollar, as you got the dollar to 106.41. But boy, you take a look at this dollar, it's just fighting that 106 to 107 area, right? You break down, you break up. It is trying to persist. It cannot break lower. 106.41 as we got the 10-year nearing 4.2%. And even with a relentlessly strong dollar, gold holding up so well. On a daily basis, you check out gold, 27.32, within about $70 of the all-time highs out there at 28.01. You jump over to the volatility index this morning. And yeah, we take out one variable of the unknown. We get CPI print. We're at 13.69. We were at 14.54 yesterday. We get a PPI number tomorrow morning. But then beyond PPI, you go to the Fed. 7 days from right now, we get a Federal Reserve meeting December 18th. All indications are that they are going to cut by 25 basis points. The probability of that cut as of this morning, we've been looking at this chart, 99.9%. It was about 86% as of yesterday prior to this print. You take out that one last variable, you do get PPI tomorrow. Not an important one. Once we're past the CPI numbers, then you go to the Fed 7 days from right now. Market, about as sure as you can be that we are going to get a 25 basis point cut. There's a 1 out of 1,000 probability, 0.1%. Now, what's more interesting, before we get into those CPI numbers, right? So let's take for granted we go to 4.25% 1 week from today for the overnight lending rate for the Fed. Where are we going to be a year from now? What's the market think? Assuming we're at 4.25% a week from now, what about a year from now? Market thinks maybe we get 2 cuts over the next 8 meetings following the meeting coming up. That's not including the December meeting. That's 2. Right? Between 1 and 2 cuts, you're almost at a 50% probability. So nobody quite knows where the path goes from here, but it may slow down. But the market is sure that we are going to get a cut 7 days from right now. And yeah, we shift to the CPI numbers. So CPI rising 2.7%. And yeah, the way the Journal puts it on the front page is that actually inflation ticked up. And it did. You take a look at the core, 3.3% is the core number. You break down the numbers, CPI month over month, 0.3, right in line with estimates, right? Every column, right in line. Core, 0.3, CPI on a yearly basis, 2.7 on a core, 3.3. Yeah, exactly in line. Shelter costs, okay? Advancing 0.3% in November after a 0.4% gain the prior month. Shelter, a huge component of the CPI. Owner's equivalent rent, edging up 0.2%, the smallest gain since 2001. Owner's equivalent rent. Basically, that's just real estate prices rising. If you own a home, the theoretical rent that you would be paying to live in that home is reflected by owner's equivalent rent. So yeah, real estate. Maybe a little bit of a pause there. Excluding housing and energy, service prices rose 0.3% for the second month. Yeah, so nonetheless, the market takes it in stride, and we got a little bit of lower yield. You jump over to the 10-year. This is the 2-year, okay? And as we go down the curve, the 2-year, you see higher price and what? And lower yield. Why is that? Well, the reason why is because maybe the Fed does have that room to cut, right? Now we have a 100% chance that we're going to cut in December. There's a lot of volatility going forward in 2025 with the new administration, policies, how they may impact everything, let alone just the volatility or unknowns in any market. But you take a look at the yield curve, and the 2-year down 4 basis points, the leader there. And the 2-year trades a lot off the short-term interest rate, right? The Fed. Where's the Fed going to be over the next year or two? That's where the 2-year gets guided by versus a longer-term 10-year. And yes, we have the 2-year down 4 basis points as they clear the path for a cut in December. And then we go from there, which is the real question in terms of where we go from there for sure. And I think you have to say it would be at least be prudent to not go too quickly with where we are in unemployment, market prices, etc., with a lot of unknowns in terms of coming down the line. They're going to be data dependent. We'll see where we go from there. All right. We take a look at Macy's. So Macy's finally reports after, quote unquote, the delivery expense investigation. Hit about 151. It was $151 million is what that employee was able to hide. How about that, right? Delivery expenses, $151 million. They raised their full year out forecast, but that is still a decline, even though they raised the forecast. The outlook, you get into it, lowered its full year earnings outlook, cutting its guidance, 225 to 250. Market was looking for 234 to 269, but they raised the full year. Okay, sales forecast. So they're going to make less money than they thought, but they're going to take in more money than they thought. Yeah. Net sales 22.3 to 22.5 billion. The range that it previously stated was 22.1. So they raised their sales by a couple $100 million, but they cut their earnings. That's a problem, right? The market's down about 10%. Third quarter sales, 4.74 billion, 2.4% drop. Comp sales down 1.3%. It's a tough one, man. I used to go to Macy's all the time, and I find myself not going there that often anymore. And I'm not the only one from this chart, right? Amazing. An equity like this, sitting around at the doldrums of the 2008 financial crisis, and well off $4, the COVID lows. But boy, it is a tough turnaround for Macy's, and you're going to be down almost another $2 today. Stay tuned, folks. We're coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have markets in positive territory following a pretty well expected CPI number that paves the way for the Federal Reserve to cut by 25 basis points 1 week from today. Overnight lending rate going down 1/4 point 1 week from today. But where do we go in 2025? Nonetheless, the markets are higher. S&P is up by almost 0.5%, up 27 points at 6,074. You got the NASDAQ almost at the highs of yesterday morning, 21,577. The Dow up just 66 points. The Russell up by 13 right now at 2402. And yeah, breaking down some of those CPI numbers, always enjoy Bloomberg. They give some good in-live analysis, and they're talking about certain components, of course. Now, I had to even look these ones up. You got cyclical inflation and acyclical inflation, okay? Acyclical inflation is inflation that the Fed has less direct influence over, suggesting the CPI is going to be higher for longer no matter what the Fed does. Watch out. Chairman Powell spits out his morning coffee. Long-term yields remain biased higher over the medium to long term. Largely in line CPI report, okay? Yield slightly lower. We're going to get that cut in December. And this is the San Francisco Fed's measure of acyclical core PCE, shows that inflation outside of the central bank's direct influence is rising. Okay? Cyclical PCE are those components that correlate most with the Fed policy. Acyclical is anything left over. The heavy lifting of the decline in core inflation was acyclical mostly, going from a 4 almost to under a 1. Now, when you talk about what is acyclical core inflation components, okay, examples, healthcare services, financial services, clothing, transportation, vehicle maintenance, insurance, certain durable goods, electronics, appliances. You had a rise and a fall, and for what it's worth, look at that chart. Okay, and that could be a problem persisting, but here's the kicker of it, which is so interesting as to how the market is pricing next year for the Fed right now. If this is the case, and one of the headaches is going to be, in terms of the persistent inflationary factors in this market, is going to be some of what I just named, whether it's healthcare, financial services, insurance, vehicles, certain durable goods. If that's a problem, then the Fed actually doesn't need to cut, because them cutting does not bring down that portion of inflation, right? So we get our cut a week from today. The market's saying, hey, I'm not so sure it's a good idea that they go on an extended cutting cycle going forward next year. And now we have data that lines up that says, hey, the components of inflation that were driving things down that are now going up, the Fed can't even impact them. So why would they be cutting if the inflationary factors right now are the ones that they're not influencing? And that would make the case for them to pause. Interesting, right? Nonetheless, that's the Russell. Yeah, market holding up at almost pre-market session highs right now. We keep our eye on yields. You got the 10-year. It's persisting. Higher price, lower yield right now. We keep our eye on the dollar as it continues to bounce around between about 106 and 107. And gold, relentlessly strong, 27.33 this morning. All right, other headlines out there talking about yields, talking about mortgages. Mortgage refinance demand up 27% as interest rates drop for the third straight week. Now, I'm always like, really? They drop? And as I say, percentages on small numbers can be deceiving. Okay, there is not going to be a wave of refinances in this market until maybe you get a 5 handle, something like that, right? They decreased to 6.67 from 6.69. Okay, yeah, it's a better deal than you were getting. But nonetheless, we're talking about 6.7%. Applications to refinance a home surging 27% week to week, 42% higher than the same week a year ago. It's not a great deal for people to refinance their home right now. You're probably doing it in a period of need, period of hardship. You got to access that equity, and probably makes sense. You got credit card debt out there, right? Depending on how long you have left on your loan, et-cetera. Maybe you can go out and you can get some type of home equity line of credit. Maybe you can get a second mortgage so that you don't have to give up that 30-year mortgage that you've locked in at 4%, 3.75, 4.5, wherever you are, if you were fortunate to get one during the pandemic. But it's not like rates are determinate right now at 6.7 to 6.7, which is what that number is, right? So I'm always amused at these type of percentages. They're small numbers compared to the wave that would ever ensue if we ever got rates to really drop, which I don't think is coming, okay? Because that's part of what the Fed is thinking about. Think about where the market was for pricing interest rates going back, 3-6 months ago, when you had so many cuts priced in, and think about the ability. And that's why the overnight lending rate's so important, right? Something like this, we're all worth what we can sign for. My dad used to say it's so true, especially in the housing market, more so than almost any other market on the planet. And you think about what you can sign for, and you think about the interest rates, and then you think about the ability to access all of that equity in these homes that have risen dramatically. The inflow of capital to the economy, which is what's supposed to happen by the Fed cutting, right? But we're in an exceptional period of time where so many people are so far below these interest rates that they don't want to refinance. And if the Fed continues to cut and makes that a more affordable option, you're going to see people refinance, which gains them access to capital, which provides stimulus to the economy. And you're going to see housing prices rise as well, which is a component of rent, mortgage, owner equivalent rent, et cetera. So refinance market, it's not going to be a market until we really get some action, or we just extend enough time-wise where, you know what happens? We eventually go out far enough that wave of people that locked in low interest rates, you go out 5, 10, 15 years, that clears that deck. And maybe that's what has to happen for another wave of refinances unless we get those cuts. As we see a little bit lower yield today, but keep in mind where the market is in terms of the forecast for cuts coming forward. We're going to get December, and then they're going to be cautious going forward in 2025 to make sure that there's no reason that they're cutting. If some of the policies that are talked about, inflationary as they may be, come to fruition, and then they have to contend with those when they're cutting into a market with 4.2% unemployment and markets at all-time highs through the roof, right? All right, folks, we're coming back for the opening bell, and then after that, it's Wednesday. We talked to our man Teddy Kegstad at 40 past the hour. Great day to have Teddy on. We got some action talking about inflation, CPI. We'll talk some currencies with Teddy at 40 past the hour, but we're coming back for the opening bell. Macy's going to be down almost $2 on the opening bell. You got Apple out there. Apple trading up almost $1. Quite the volatility. We'll talk a little bit of Apple when we get back. We'll talk their AI coming to their operating system as of now. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kegstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kegstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P up by 28 points right now, 6,073. NASDAQ 100. We're coming into the highs of yesterday, 21,583, up by more than 0.8%. Dow, a little bit of a laggard, up only 39. And you got the Russell up by 14 right now. We check back in on Macy's with their numbers, down 10.7% as they digest their earnings. Okay, and jumping around, Google. You had yesterday with their quantum computing breakthrough. You trade higher in dramatic fashion, and today we're up another 0.3%. You got Apple. I was trying to find that article. I got too many good articles, as usual, up here. Let me see if I can find it. Did I pull it over here already? No, I did not. All right, shame on me. Ah, there it is, of course. So, they released a new version of the software that includes ChatGPT integration with Siri. Okay? So, ChatGPT, that's a big win, of course. Now, not necessarily driving the Apple stock price today, but nonetheless, iOS 18.2 release. And that's what I was getting to. You need an iPhone 15, an iPhone 15 Pro, or a 16 model to install and use Apple Intelligence. That's part of the reason why that stock had accelerated so much last year, right? When they started talking about, you take a look at Apple. Was it part of this acceleration? Or was it when they came out with their numbers in August? But either way, they came out with the fact that, yes, they're going to have Apple Intelligence, and you're going to need an upgraded phone. I have a 12 Pro Max, folks. It's an outstanding phone. I have a 12 Pro Max, and I'm 3 generations out of tune, which is remarkable when you think about the progression and how I have a great phone. But nonetheless, it's not going to work for Apple Intelligence for some time, and eventually I probably will get a new phone, but it's almost 4 years old. Works outstanding. It's right here. Works outstanding. Great phone. I had to turn it in once recently when I had a screen problem. You pay $100 for insurance, whatever it is, but nonetheless. Closing that. So we got Apple. We test the highs. You jump over to Amazon. This market continuing higher. 228.90, up by 1.4% for Amazon shares right now. Look at that bid. Yeah, it's just nonstop right now in these tech stocks. Microsoft up 0.5% right now. Google, following their run yesterday, catches a bid, up another 1.2% for Google. Meta up by 1.5%. We jump over to Tesla shares this morning, up another 2.3%, $410, only $10 away from Elon's $420. We keep our eye on yields this morning, abating a bit, but holding on to a lot of those gains. .21% on the 10-year. The dollar chopping around at 106.50, basically the middle of the range that we've been in the last 2 years, right? You check it out. It's continuing to try and battle above this 107 to 108 area. That's where we were about a year ago in October of 2023. That's where we were in April of this year. And you back it up even further than that. And yeah, critical technical area that we're coming into. It's bumping up against it. It is interesting, right, that what do we have? We have lower yield. And even with lower yield, we got a lot of dollar strength right now. A lot of dollar strength and a lot of gold strength. 27.33. Checking on some of these copper stocks. SCCO. Let's see how this one's doing. I was looking at this stock earlier in the week. Southern Copper. Yeah, you got a pop a couple days ago and some nice volume on Monday, giving back some of that action. Check out New Gold, sitting at about 293. Endeavor Silver. Yeah, let's check out silver. Silver actually negative today. We back this thing up. Pretty remarkable. Silver makes it up to $50 in 2011, right? We're sitting at $32 right now. You're bumping up against this $35 area, which is where you consolidated in 2012 before escalating lower. Compare that to the chart of gold. Quite a different story, right? Silver tops at $50. Meanwhile, we got gold topping at $17.50, and now you're trading at $2,700. Almost the story of Bitcoin versus Ethereum. All things not created equal. There's your Bitcoin, up $2,700, nearing 100,000, only $340 away as we speak. And then you check out Ethereum, which hasn't traded as long, but Ethereum sitting at 3,700, actually below where we were in March and well off the highs of where we were in 2021. We had some interesting conversations earlier in the week, right, about where does Bitcoin fall if there's nothing to say that even if we did create a reserve of Bitcoin, why can't America create our own digital token to create a reserve? Why are we going to use Bitcoin? Why don't we just create one? Well, the whole point of a cryptocurrency is so that you're not controlled by the government, etc. But the point being that it's an arbitrary value for an arbitrary coin that is replaceable to some degree. With that said, all Bitcoin does is go up recently, but we might be at a stage of buy the rumor, sell the news as we accelerate into the level of optimism that is baked into the future of Bitcoin. Yeah. Jumping back to one more summation of Bloomberg, checking this out, and it is interesting when they talk. So we talked about acyclical versus cyclical inflation, right? Shelter costs, huge component of the CPI, almost 40%. That's why the Fed prefers the PCE, because shelter is almost too large in CPI. Shelter costs did slow from the previous month. Owner's equivalent rent down only rising 0.23%, but the smallest increase since the start of 2021. Food and used vehicle prices were among components pushing up the CPI. These are the ones. Remember, acyclical inflation, vehicle prices, food prices, healthcare, medical care. Okay? Few major components saw a decline, but what was pushing it higher? Food, used vehicles, healthcare. And those are the components that are difficult for the Fed to control. So do they cut? Why would they cut? We will see. All right, folks. This market persisting higher. We jump back to the S&Ps right now. We're pushing session highs up by 31 points, we'll call it, at 6,076. You get the NASDAQ 100 above 21,600, up 195 points. Yeah, some of these tech stocks. You jump over to Apple shares. They're up 0.3%. Amazon pushing higher, surging up 1.5%. You jump over to Microsoft, up 0.25%. Meta up by 1.6%. Look at that acceleration. Up $5 on the open for Meta shares. All right, folks, we jump to the dollar. Dollar index 106.58. Stay tuned. We're coming back with our man Teddy Kegstad of the Tiger Forex Report. We'll talk some currencies. We'll talk some commodities, some yields. Don't go away, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're working on the connection with our man Teddy Kegstad. Hopefully we get them all set, but we check it out. You get the euro right now, trading at 105. You jump over to that dollar DXY 106.54. And folks, check out the Tiger Forex report. Hopefully we'll get Teddy on here. And here's a quick glimpse. This is a report he puts out every week. All right, this is the report, December 9th. He's talking about your dollar in here. Crude oil, 30-year T-bond, euro US dollar in there as well, pound US dollar, all right, dollar Swiss, right? You got your yen in there, Aussie dollar, New Zealand dollar, and then Canadian dollar as well, with trading updates throughout the week when warranted. So check that out on the front page of TFNN, and hopefully we get our man Teddy hooked up. I know we'll get him in there regardless, even if we got to get him back tomorrow. We check back at futures. S&P's up 32 points right now, 6,077. You check out a daily, okay? And yeah, we're talking about what? 42 points, 44 points from all-time highs. And today was the last hurdle. We go into a Fed, but that's the last economic data point that we get before the Fed on December 18th, and that's the last action that you get ahead of 2 weeks of holiday trading. Right? You're talking about January 6th is almost 4 weeks away, but it is remarkable that we get next week with the Fed and then 2 straight weeks of holiday trading. All right, and with that, we got our man Teddy Kegstad. He's all set. Folks, head on over to the front page of TFNN. There's your Tiger Forex report. You can sign up for $97. I just showed you a glimpse of that report. It comes with a 30-day money-back guarantee. Teddy Kegstad, good morning.
Morning, Tommy. How are you doing?
I'm doing good. How about yourself?
It's freezing cold in Chicago. I'm getting colder.
Oh my goodness! That windy
Single
city,
digits
man.
tonight, baby.
You guys got some a different kind of chill when you get that wind, man. I was telling Tommy yesterday or a couple of days ago, we get, this is, I enjoy it, of course, being from the Northeast. This is why I'm here. We get this beautiful weather, but it is amazing how spoiled we are, Teddy. It gets down to like 58 degrees, and Tommy's getting out of the bath, right, and he's freezing. And I'm saying, man, you're so lucky. You wouldn't believe, Tommy, what people are going through in different parts of the country. Anyway,
that's shorts weather.
Exactly. And we got it made, man. We are. You know what I mean? We're out. We're going to parks. But it is funny, that little chill we get occasionally, he doesn't know what exists in terms of the Northeast and then the Windy City cold. Right. This market is pretty hot. Not cold at all. CPI pretty much in line today. What are you watching in this market, Teddy?
Well, I'm watching, obviously, the interest rates and on the dollar index going into the Fed meeting. I would expect that, except for the numbers now over the next couple of days, we're going to settle into a range trade. It's not. I wouldn't have very high expectations as far as how much volatility you're going to see or any follow. I'd be very careful looking for any real trend moves on any intraday action over definitely the next few sessions. So we're going to have the release on Wednesday. I would be shocked if they didn't cut a quarter point. I think a quarter point is probably as high as they're going to go. We still have lots of signs of inflation. The only things that have really pulled back a little, because at least oil price has been now stable for the past 2 months. So in that regards, margins have leveled off. They haven't gotten better, but they've leveled off. They haven't been spiking. So that's the only relief you're going to see probably in the economic sector at all, as far as those kind of numbers are going to reflect, which isn't really going to show until probably January, and it's going to be very nominal. So I really don't look at today's CPI number as any real big deal. When we have a real big dip in CPI, like something that starts a trend where you're like, oh, last month it was this significantly lower and we're lower again, I think then you're going to see something that's going to actually impact the markets. But being flat, that doesn't say very much right now. That just means that we're not accelerating. So I really don't take the CPI. I don't take very much stock in. I think you really need to watch out more for unemployment claims tomorrow. And then obviously the reaction on the Fed. I think that you're probably going to see, like you're seeing today, a little uptick in yields, but not much. Right now, yields are up slightly today, but they're coming off a new daily low, or high actually, as far as in yields and lower pricing. So the fact that they're up slightly today, we're only up slightly higher than we settled yesterday, but we still took out yesterday's low. So I think that today that's a key area to watch as far as interest rates. And we'll probably see it rally a little bit into the meeting. But after the meeting next week, I wouldn't be surprised if you take out the low from from today.
And we say, Taylor, take the low for lower price, higher yield?
Yes, correct.
Yeah,
correct.
Perfect.
Yeah.
And the dollar, it's remarkable. We've been talking about it for a while. It's been pushing this 106, 107, 108. We just hit 106.80 in the pre-market. We're still at 106.52. Talk to me about the dollar a little bit. Quite a 2-year consolidation, but
Sure.
we're pushing the upper boundary right now. What do you think about the dollar?
Short term on the daily, I think that today, it just like yields spiked this morning to the downside, meaning higher yields now coming back, going towards the lower direction into the Fed meeting. I would watch today's high in the dollar index. If the yields are acting that way, you should probably see today probably being the high of the range for the next few sessions, unless you have any real knee-jerk reaction to some numbers and get it definitely like higher yield pricing. Because if you look at the chart pattern on the dollar index, Friday's low definitely, in the Tiger Forex report, I put higher low, question mark, question mark, question mark, not trying to pick a bottom. Interesting thing about that is that low would also be the bottom for a neckline for a Head and Shoulders. So if we were to take out Friday's low, I could see us getting a nice little slide down. Probably I would say we're testing our downside breakout level, which is around 104.32 in the dollar index. Should we get down to that, well, then we might actually start to see a little bit of a slide where we could get down. Remember, there's a gap, if you look at the dollar index chart, that goes back to November where we gapped open, and that's when we started this big rally that we topped out in a couple weeks ago. According to basic technical analysis, all gaps get filled, right, eventually, especially when you're talking about something like an index or unlike a stock, an index is only going to go so high. There is, no matter what, there is a high in the dollar index. It can only go, just like interest rates, there's only so high it can go. Eventually, you're at zero interest rates, okay? So unlike a stock that could technically go to infinity, if you will, right? There's a floor in the stock pricing, but there is no ceiling, okay? So I think that that's kind of where we're looking at, where we're going to be in a range trade between today's high and the low that was set on Friday in the dollar index. Those are key areas. If we take out the high from today, I think it's going to be a grinding high just because we're coming into the Fed meeting. I'd be very cautious. I'd be more of a sell rally trader as far as the U.S. dollar over the next few sessions, just because I think that you're going to have a good selling opportunity when it comes to that, since we're coming into the Fed meeting. You see what I'm saying? So I would wait for rallies and sell them. As far as dips, I'd be very cautious right now. So I would be more of a sell, wait for an exacerbated rally to sell into on an intraday basis, but don't have high expectations. And that's why I'm saying don't expect follow through. That's where I think you get to be able to have that, pull off that trade.
That's great info, man, and that's where we've been chopping around for a while right now. Teddy, I appreciate it as always, man, and we'll talk to you next week. Last time before we come into that holiday trading, and we get to talk to you on Fed Day next week. Even better, man. Have a great week. Right. We'll talk to you next week, and stay warm, Teddy.
Take care. Thanks.
Take care, man. Folks, check out that Tiger Forex report. We'll come back. We got one more set. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets accelerating higher. NASDAQ 100 leading the way up 281. How about forget about yesterday's high? How about Monday's high? We're at 21,687, up by 1.3%. S&Ps right now up by 0.6% right now. Dow actually in the red. The Russell up by 13. How about Stitch Fix? Okay. Second quarter revenue outlook on their numbers. You're up by 23%. What do I always say? Percentages on small numbers can be deceiving. You're trading at $5.66. How's that compare to where the stock's traded? $113. Yeah. A pandemic darling, as everybody ordered their clothes from home. In hindsight, it almost seemed remarkably easy to figure out that the growth they were factoring in would not persist. You trade down to $2. We come into the earnings at about $4.50. We're at $5.68. And they're talking about revenue in the current quarter of $290 to $300 million. Market was looking for 283. That's like barely a beat, okay? They raised the top end of its full-year revenue outlook, $1.14 billion to $1.18. They were previously at 1.1 to 1.16. I wouldn't get excited about this stock, folks. You were just at $2.50. Yes, maybe you're going to get a bit of a turnaround. You're talking about a company valued at $720 million right now. They take in $1.1 billion. And yeah, nonetheless, it's up by 23% today for Stitch Fix. What's Dave? Play. Dave & Buster's. Yeah, down by 14% for Dave & Buster's on their numbers. Their CEO is departing as well. All right. Thanks so much for kicking your trading day off right here. That was a fast hour, man. CPI Wednesday. We got PPI tomorrow. We got a Fed 1 week from today. And we got our man Basil Chapman coming up next, folks, with the Tiger Technicians Hour. Stay tuned for Basil. Markets in higher territory. Yields a little bit lower. And have a great Wednesday, folks. Stay tuned for Basil. We'll see you tomorrow, everybody.